Okay, ladies and gentlemen, boys and girls, welcome to the Bitcoin Halving Day Market Power Hour. Thank you guys for being here. Exciting times. We thought we were going to Goblin Town. You know, it was imminent. Suddenly, we're breaking up. We're breaking some key levels and all kinds of stuff. Lots to talk about today. With us, we have, as always, the great Josh and Schmitty. Guys, you could say hello.
What up? What up?
Hello.
Hello. So yeah, exciting times. Gents, did you think 4 years ago that we would be, at today's halving, that we would be at an all-time high?
It's funny you say that because I went back and checked my tweets.
Yeah, he was 33K by July. What do you mean?
Yeah, right.
No, I went back and checked. Let me just pull up the tweet or the picture, but
Hold on, let me put your screen up. Man's got receipts, chat. Hold on, let's see.
I got to hold on, I gotta bring it up first. Sorry.
To be honest with you, like personally, I don't really even think that far ahead because I don't really care. But like I didn't have an opinion either way.
Hold on, my Zoom. Oh, there we go. Okay.
Share screen 2. Boom.
Man clears his throat. Let us
Yeah.
see it. Let us see it.
Just as we no, so when I was at Valkyrie, like trying to get people on board to buy anything crypto after SBF blew up FTX was basically impossible. After that, like days and days after that, the wounds were still fresh, but again, it's like, how are you gonna sell a product to somebody? Like clearly I'm on board, I'm all in, like regardless, right? But to TradFi folks, like talk about the cycle, talk about days to all-time high, talk about where you think price may go, right? So this was something similar to what I put together at that time. But looking at each all-time high relative to when we hit the next new all-time high, it was about 1100 days from all-time high to all-time high. So if you take the first 2021 all-time high, project that forward, we're about in the wheelhouse. Like we're still early even on the 1100 day expectation. But
dude, I like that. I like how there's always been this feeling that double top that we got last cycle, that somehow has like skewed things going forward and like adjusted things. Some people call it like the left translated cycle, whatever, like pick your name for it. But it just, that was so different, having big, rather than just erupting and then cascading to the downside, being in a channel for 2 years and then some, you projecting forward off of that. I think that's pretty cool. I never even thought about something like that.
Yeah, it seems less so relevant about the all-time high and more about the cycle top. Seems to be the
well, we're clearly
connective
early.
tissue.
Again, we've talked about this a billion times, like you said, but the new all-time highs usually come after halving, not before, and it's usually way after halving, right? If we look at like 290 days for 2016, 207 days for 2020, so we are clearly way ahead of that, previous trend.
Right.
So what's more important, having the date, or is the previous all-time high more important, or is the cycle low all more important? I don't know. Like you can look at each of those points and measure whatever you want to measure, right? And then looking at like projections, even today these projections are pretty generous, right? Like 690K is 10x the previous all-time high.
Is that it? That's all you have?
So the bear case here as listed is probably more likely, but the bull case isn't an impossibility. I just, it's hard to say like, yeah, we're gonna hit 1 million this cycle. I don't think that's happening. Anyway,
I would have bet my house that we, like going back 3-4 years, that we would not be at an all-time high today, or have made a new all-time high prior to the halving. No shot would I have ever gambled on that happening ahead of time.
I don't think you would have known about the ETFs though, right?
No, yeah, I just mean looking at the charts and like kind of projecting forward.
Yeah, at that time, no. Even at the bottom, January February, March 2023. Like I wouldn't have thought, hey, we're gonna be at all-time highs this soon.
Yeah.
There's no way.
I remember thinking 30K was like, maybe I was getting a little crazy when we were at 15K. I was like, I need to temper this down. Let's say like 20, 25.
Well, I was thinking today that this range kind of reminds me of, if we go to like the weekly, the daily picture kind of reminds me of this weekly Head and Shoulders that we got that didn't really go anywhere.
Okay.
It's still like an open question what's going to happen at this stage. I don't think it's necessarily resolved yet one way or the other, but looking at what we got here, we still got a breakdown. We still satisfied the Head and Shoulders folks really, but we didn't hit the target. We reset to the horizontal support, and this was post BlackRock ETF announcement too, by the way. We should have just kept going. I would argue this is more of a liquidity thing. If you look at the liquidity picture around that time, we were ahead of schedule. Anyway, the point is, like, we can still break down and break up. It's not, the decision tree here is still completely wide open on the daily. Before I talk about the price stuff, I'm going first, right?
Yeah.
Okay. I wanted to talk about some on-chain stuff because why not?
Sure.
We haven't talked about that in a minute. I think one way to look at this is, what are the all-time highs and what are the cycle lows again? Where were the halving expectations based on where we were with each of these on-chain metrics? So this is realized cap hodl waves. This is looking at when coins were last moved on-chain, and then it gives them an age based on how long they haven't moved for, basically, like the unhodling metric, effectively. If we look at previous halving periods relative to where we are now on the realized cap, so the hot colors represent low time frame churn of on-chain activity, basically. In the last halving period, we were about here. It's certainly a little hotter than it was last halving period. I think that's to be expected based on all-time highs. Anytime you start pushing all-time highs, new unholders appear, aka people start selling. That's what we've always seen. Look at each all-time high period. You get more and more sellers, but as long as we get more and more buyers, right, it cancels it out and we keep going. Eventually, this reaches a tipping point where you have more sellers than buyers, and that's it, right? So one thing to watch for going forward, how many times can this metric reset post-halving? It's already sort of resetting. It's cooling down a lot. The people that have wanted to sell, who are sort of regretful at the previous two all-time highs at this level, have probably sold at this point, if I had to guess. They've had plenty of time to do that. So I think we're going to see this metric calm down quite a bit. But what we don't want to see in this cycle quickly is a bunch of people come to the table at like 70K or something again and sell, or 80K, whatever it is. We need people to keep holding into the Ponzi, right? if we want this to keep going up. So far so good as far as that metric is concerned. And it's also worth mentioning the inflation adjusted all-time high. We haven't hit that. That's like 79K. So we really haven't even hit a realistic all-time high, even though no one actually thinks in terms of inflation adjusted anything. MVRV is another one, which again looks at realized value of the coins moved versus market cap. And it gives you a lower bound metric, which historically has acted as like the support level or buy anything close to or below to this level. So we're way above that. The MVRV Z score is also telling you, similar to previous halving periods, we're slightly ahead, but it is resetting. So once again, this just represents unrealized profits in the ecosystem. If there's a ton of unrealized profit, eventually we hit a tipping point where for most people, it makes more sense to sell. And then we go down, right? That's that. So We don't want to see MVRV spike to 6, spike to 7, spike to 8. It's good to see this churn. It's good to see realized value move up and price still hold at these levels. So I think we can all agree it's kind of amazing. We're still in the mid 60s, considering all that's happened with everything lately. PUELL is another one. This looks at miners. Basically, how rich are the miners and comfortable are they today versus the past year? Each halving, this gets kind of cut in half, okay? Unsurprisingly. So if we look at the previous 2016 halving, you can see the big spike down. In 2020, you can see the big spike down. Just like MVRV, similar concept. If the miners are too fat and happy, too comfortable, they are more likely to sell. They are more likely to sell more. They are more likely to cause an interim top or a cycle top, right? So we're not in the danger zone quite yet. And the good news is post-halving, this is going to get, sliced quite a bit to the midpoint is my guess, somewhere thereabouts. So all this looks okay for having expectations. This is the liquidity picture, global M2 versus BTC. A lot of people have been talking about liquidity for a long time. And this is just one way to measure that. So this looks at, USD, BOJ, ECB, PBOC, everybody, right? There's a lot of people who are pretty optimistic that that liquidity will continue to increase, global M2 will continue to increase, and B, Bitcoin will respond positively as it always has. If we just look at like the multiplier effect in the expansion of liquidity each cycle, it's always been beneficial. So if you think more money is going to get printed, then you should be bullish. If you don't think that, then you shouldn't be bullish. But this is pretty one-to-one as far as what to expect, I would argue. Back to miners again. Looking at the mining production cost, it's hard to know how to use this information. So this looks at the electrical costs and the production costs. It gives you a miner price versus the actual price of BTC. Again, you can see post-halving, this thing's going to spike up a lot and then probably settle down over the next couple months. But yeah, what do you do with this? You consider the bands like support bands, and do you buy? Do you consider excesses above these bands, overbought conditions effectively? Similar to the PUELL multiple, I would argue, we don't want to deviate too far above this. And historically, we haven't really deviated below this ever. So, my read on this would be the ultimate low of this move would be the bottom, which is 38.5. And that's today.
Interesting.
So tomorrow, tonight, whatever, this is gonna move up relative to halving, right?
Yeah.
So this is probably one worth checking out.
Let me interject here real quick.
Yeah, go for it.
Chat, I really like the Bitcoin production cost. It's kind of slept on, and a lot of people might think it's kind of useless, especially like when you just look at it and it's just a bunch of like movement. But it's really useful for bear markets. And it's one of my favorite because it's so pure. It's such a pure way to look at Bitcoin. So for example, think in the early days, like in the first month or two of Bitcoin, they didn't really know how to price it back then, right? Like it wasn't this big speculative, $100,000 asset. It was for pennies. And so they said, well, I just mined a bunch of Bitcoin. Who wants to buy them? And somebody said, well, what's a fair price? And they said, well, hell, I can kind of guess at what the electricity cost my computer used. And we can kind of divide that with how many Bitcoin I got from the block and say they're, a penny each or 9 cents each. But that was like at its very base value, its base layer. This production cost was basically how Bitcoin was priced like day one.
Yeah, because of the proof of work element, it gives it a real world comparison, right?
Yeah, so I like that for like bear markets. I think like that red band, that lower band, it's an excellent metric to kind of give you an indication of when's a good time to buy, or is there a chance it goes lower, or is this pretty much rock bottom, like you're scraping the gravel?
Yeah, I think you could also put an oscillator like electrical cost relative to price. Again, like
Mhm.
what is the percentage above or below?
Yeah.
And put a z-score on that or whatever. And again, the good news is this moves up every halving. Okay, so this is going to move up if the trend continues. If history repeats itself, that's going to give us more leeway for expansion post halving, right?
Right.
Because that gives us more room above the electrical cost. It also gives us a potential floor here. You know, there's a lot of like caveats and if, but just something to think about as
Look
we
how much
have halving.
the miner price like greatly deviated from spot price going into the ETF. See that?
In here.
Yeah, look how much it was. It's almost like 2-1.
I think that's another indicator to watch as far as overbought conditions. You know, you can
Yeah,
see
it's like
any
forwardation kind of.
yeah, exactly. Anytime we get, I'd zoom in, but I can't zoom in on these. But anytime we get way on a lesser relative basis than the electrical cost, right? Anytime we get way overbought, even in the bear market in 2017, 2018, there was still a massive deviation there.
Mm-hmm.
So that just tells me, similar to that unrealized price metric, like there's a ton of leeway that the miners can just dump coins. We know the
Yeah.
miners are holding a bunch. We know the miners hedge, whatever, blah, blah, blah. But even here still, it's hard to see, but there is a deviation between
Yeah, because it's log.
the miner price is basically the production price. So I think this is this updated? No, it's like a day or two behind. There is a pretty big deviation here on the miner price versus production price, but I think we've hit it now because we've tapped like 60, whatever, 59.9 or something.
Yeah, it's really interesting because you can literally visualize the like the sentiment of the market based on what people are willing to buy at miner price. Because that means they're probably buying in bulk, right? So they're buying in bulk, they're buying fresh from the tap. And if people are willing to pay that price, that probably means when you have a huge deviation like that, that you're euphoric or whatever you want to overlay on that stupid little euphoria greed
Yeah, for
chart,
sure.
Yeah.
Sentiment.
Yeah, the sentiment chart.
It's a good chart. It's cool.
Yeah, so it's a fun one. You obviously have to trust the inputs on this and blah, blah, blah. Again, caveat. But
that's so fun, guys.
This
so you can't zoom in on it, or what's the deal?
I can't zoom in on this, but if you go to TradingView, he does update it occasionally.
Yeah, I wasn't sure if that was the same thing because I've played around with that on the actual indicator where it's like a series of, it's like the same shit, right?
Yeah. He does update this. I don't know why it's not really showing up.
Josh,
I don't
need
think
you to
it'll be
turn
anything actionable where you're like day to day, I'm gonna trade this, but it does give you like a good gut check of like, I feel like this is probably near a top. And then you see a huge spike. You're like, okay, that supports my.
Yeah. Add it as like a checkbox for whatever else you're looking at.
So you can see since January,
that's crazy.
It hasn't been updated. I don't think in TradingView, but it is in TradingView. The it looks like the miner price or something's getting updated here. Anyway,
Josh, I need you to like toggle on all those indicators and tweet out like TA tells you all you need or something, or like TA wins.
Dude, you need to get some
something.
indicator templates. What's going on with you?
So I just like to see it. I like to see that they're there.
So
they might go somewhere.
It's having, obviously, it's a good time to look at Google Trends. If we look at just the Bitcoin search term worldwide, we're okay. You know, you could think of this relative to halving, but I don't think that really matters. What I found interesting, this is the Bitcoin halving
oh gosh
search. Just it's a new all-time high by several multiples.
Did you try searching it without the L? The Bitcoin halving?
I haven't.
Having.
It's the
same.
God damn it, the idiots are out here.
That's awesome.
I'm sure having is probably okay.
Oh, that settles the old debate.
Anyway, so there are people like writing articles about this, people reading about this, people looking up
Yeah.
what the hell this thing is, right? Regardless of price and what's going on, and as sideways and boring, there's clearly a lot of clicks for Bitcoin halving. Looking at ETH and Sol, just as a comparison, these are both, there's not a lot of eyeballs on a relative basis on either of these. So just keep
I feel
that in
like
mind.
those are pretty niche in terms of like you go to the water cooler. I don't think many people are talking about fucking Solana meme coins at the office. You know what I mean? Like they're talking about larger. Like I still have people coming up to me and talking to me about like asking what blockchain is. Like they don't even know like the basic things. So for people to be interested in Solana right now is like it just doesn't seem likely to me.
Can I introduce you to some racist NFTs on the Sol platform?
Yeah,
Yeah,
let's
no
not.
shit.
I'd agree with you, Schmitty, and I think that's important to like realize like everybody's in a bubble here, and if you're in this stream, if you're trading on the Solana chain, like you are not. There's not a lot of people doing that, just in general on balance. Certainly, more people
Yeah.
are aware of the Bitcoin stuff than Solana, So it might feel like it's a new paradigm on Solana or whatever, but there's really realistically not that many people who could care less, right? Looking at the ETF flows have been flat, down, negative, nowhere near the flows we saw in March. And we're seeing that in price. The flows aren't everything, but they will help or hurt us when nothing's going on, and nothing's going on, right? So this is not surprising to see flows flat. Just another thing to just echo, like, yes, it's chop, it's range. Nobody's here trading per se. People are aware of what's going on, but trading wise, it's all over the place, right? I put together this seasonality chart. So if you're familiar with like the SPX and QQQ seasonality chart, all this is doing is taking each day since 2012 and averaging out the percent change, basically. And then you just map that out. This is our average seasonality since 2012. And we're about where you'd expect us to be. We were a little bit excited there in March, and we've kind of let the moving average effectively catch up to price, let seasonality catch up to price. And you can see the mid-April bite in price there that we have had historically. So this tells me we're on track. Okay, great. It tells me there's some juice left potentially until June. Okay. It tells me, June, July is flat. There's barely a move from July to October. September is trash. August is trash. And then Q4, clearly, that's where you want to think about being seriously positioned again after mid-year, just based on seasonality. So unless there's damning evidence otherwise, seasonality suggests you really don't want to be 10x short or whatever going into October. You kind of want to say goodbye to the bearish thesis unless there's a good reason to do so coming into October, because that's where all the fun sort of happens. I also looked at, go ahead.
No, I was gonna say, just thinking through it, like I would love a breakdown here and just completely flush out all the ETF to the moon crowd sideways for 2 months. Those guys just find something else to focus on, and then we actually moon rocket right after that. I just think that would be like in quarter 4 or whatever. Just it would be very poetic to me.
Yeah, I mean, we could easily just go sideways until July and then do nothing August, September, and then maybe snap back to this seasonality, in Q4 or something. But I am seeing a lot of legacy guys dancing on our grave a little bit. We're down 20% in a week. They're like, I told you so, right? They missed the entire run up, and they're like, oh man, I got this one. Like,
yeah, calm down. Right.
A lot of anti geopolitical hedge tweets coming out. because we dumped whatever. Anyway, this is another one I put together looking at having plus or minus 400 days. Again, you could do any days you want. You could do a year, you could do 2 years, whatever. But I did this one specifically for the left translated cycle people because, again, we are where you'd expect us to be. Looking at 2016 and 2020, this is nothing out of the ordinary. It might feel like we were ahead of schedule, which I'll agree it does feel like that. But looking at previous dates, this is we're on track, right? And again, what's 200 days from today? 200 days from today brings us into November. So this is, again, suggesting October is probably where we're going to see Q4 is where we're probably going to see the meat of the halving move, if we see it, right? Which I think we will. But all that's just to say we're not going anywhere soon, probably up or down, you know. That's just another version of that chart anyway. Something else to consider if you're like a DCA warrior or a paycheck DCAer. Historically, when we're in a bull trend, we live above the 20-week moving average. We tend to attempt to retrace to the 20-week moving average. So anytime we're close to the 20-week moving average in a bull trend, that should signal a buying opportunity. The red dots, the red diamonds, are the previous halvings. And again, we're where you'd expect us to be. We're above the 20-week going into halving. We have the potential to retrace to the 20-week, which would be at like 52 or 54. Historically, we live on average above the 20-week. And, you know, again, this is nothing like out of the ordinary. Even pulling back wouldn't be out of the ordinary. So for people who are like, oh man, I got to get a better price if I'm DCAing or something. I don't know. Like, yeah, sure. Like plus or minus 5,000 maybe. But is that really going to matter? I don't think so. The other thing, like if we are below the 20-week, then we're in trouble, I would argue, because that would be abnormal. Of course, it's possible, but something to watch for, definitely. Looking at funding reset a little bit for a day there. It's back to positive territory, but again, something like if we're checking the boxes, is OI down? Is funding down? Are people screaming that they're losing all their money? Like these are all checking the boxes for me. That this doesn't mean we can't keep going down. It's just it's a good sign to see that. Historically, we haven't stayed negative for a long time, and you know, and if we're in a bull trend, we shouldn't stay negative on funding. We should reset and then start our journey once again positive. So I don't think that's anything too crazy. Looking at liquidity versus L2, sorry, total 2 and BTC. Liquidity is in the green. Yeah, liquidity is in the green. It's US liquidity. Because of tax season and because there's actually a big jump in reverse repos over the past week, that just represents money going out of the ecosystem. And so that acts as a headwind for price. It's no surprise that alts got clobbered. BTC is getting clobbered on that. This is, to me, a lot of like seasonal liquidity stuff. So again, like we're not going anywhere. Don't expect a miracle. Down's going to be easier than up. The liquidity picture should improve towards the end of the year.
Dude, you're so bearish. Down's easier than up. This guy.
All right, last few charts here. Here's the pitchfork. Pick 3 points, you get a rate of change. With the 20-week moving average, we should not fall below the midpoint of this pitchfork. We should not fall below the 20-week moving average if we are bullish. The low point here is about 54K-ish, 54, 55. I don't know, whatever that is. So, you know, if you're bearish, then what is the risk reward here for you? It's there, but it's not like amazing, I would argue. You know, unless you're assuming we're going to go sub 50. If you think we're going sub 50, then sure. But it would be very unusual for us to retrace below the 20-week. I'm saying that over and over because half of me expects that to happen this time. Like everything's been unusual about this cycle, right? So possible, but unlikely. So this would be the heat of the meat for the move to the downside for me. Looking at daily cloud potential head and shoulders up here, it's been a messy breakdown. hasn't broken below the cloud, which is kind of a miracle. That's like pixel perfect to the cent. It's held at that level on those daily closes. The trade setup is basically, the February TK crisscross. That's the long side to watch. That's like going to take a month probably to play out. The quicker trade on the short side would be a move to like 55 again through the cloud. So we could go sideways till mid-May, hit the cloud at 65, and then have a move from 65 to 55, something like that. But again, there's nothing really to do here for me. There's just nothing, just chop. So that's BTC. And then quickly, Legacy, again, I said last week, Legacy looks real bad because Legacy, unlike Bitcoin, is closing into the cloud. You're getting a bearish TK cross. You've had 5 red days on the S&P, pretty big red days for the S&P. The downside on the cloud here is pretty significant in the near term for the S&P. Qs already just crushing through the cloud, hot knife through butter. Again, downside is pretty significant. So if there's anything that can drag us down, it's going to be Legacy, 100%. And if that's just natural mean reversion here, if that's just like geopolitical stuff, I don't know. It doesn't really matter, but it's going to be increasingly difficult for Bitcoin to hold up if Legacy's crushing lows. Now, if Legacy retraces significantly and Bitcoin's still above 60, like, love it. Awesome, right? That's best case scenario. I just don't think that's necessarily likely. Here's SMCI. Again, I've been talking about this just because of the head and shoulders thing. There was some like oddity with their earnings announcement. I don't know exactly what the details there are. I don't really care, but technicals clearly telling you this is not bullish anymore. So yeah, that's all I got. But
TK cross setup right there and all kinds of stuff. The Qs they already crossed on that last
yeah,
chart.
exactly. You've had S&P is going to cross bearish here. The Qs crossed bearish a couple days ago. You've had head and shoulders setups. You've crushed supports on the Williams fractals. It's just bearish. The most bearish it's been since like last year, easily, for Legacy.
Yeah.
So that's all I got.
Good stuff. All right. Well done. Schmitty, you want to go next since I let it off last time?
Sure.
Schmitticus.
So I'm optimistic, as pessimistic as that may sound, but I think reality is going to be like, yeah, we might go to 55. We might go slightly lower. But I don't think you're going to have a great trade setup anytime soon.
36.
All right. Can you see my shit?
Yeah.
All right. So I'll start off. I mean, so to be honest with you, like if you heard my bit, what was it, last week? This is basically just going to be a little bit of an update from that. So I'll start with the dollar index. From a macro perspective, that's my preferred starting point. If you're not familiar with the dollar index, it's not really, there are some instruments to trade it directly, but it's essentially just a weighting of the US dollar versus a basket of other world currencies. And so as the dollar goes up, everything else relative to the dollar goes down, Dixie goes up, right? So what that means, what it potentially could mean is that if Dixie's going up, that means that there's, if we're looking at supply versus demand going up means there's a demand for the dollar, which means that people are selling assets denominated in the dollar for the dollar, right? So if you sell stocks, dollar goes up. If you sell crypto, dollar goes up. If you sell a house, dollar goes up. So all this means is that a bullish market condition for the dollar index is everything anti-dollar is bearish, right? So stocks, in the short term, a lot of times gold, other metals, even housing can sometimes be affected by this. It's kind of just like saying, is there demand and hunger for cash? And right now that makes sense, right? Like there's a lot of uncertainty. Like every time there's a threat of a strike from Israel or Iran, the market immediately reacts. And that's probably not going to change anytime soon, to be honest with you. So it's just things are getting worse. And so I think because there's uncertainty, there's going to be a flight to cash and things like gold. Right now for the dollar index, when we're looking at the weekly time frame, last week closed humongous breakout of the Bollinger Bands. And all you need to know about the Bollinger Bands is when they're squeezing, that's the market's in consolidation, and when they're expanding, something like this, that's, an objective view of a breakout. And right now we're on the upper band, which if you're a Bollinger Bands enthusiast, that means that we're beginning a new trend. So historic examples of this, boom, we see this upper band attachment, boom, we see the squeeze and the expansion, upper band attachment. And this looks to me like the early signs of something, like that. So why do I care about that? Because if this continues to go up, that means most likely other riskier assets such as crypto are going to most likely go down. And we can look at this historically. Just the ADIQ version of this is, okay, here is our 2017, mega turbo bull market occurred when the dollar was in bear market. Prior bull market was in dollar bear market. Prior bear market was in dollar bull. So you get the picture. It's like dollar up, Bitcoin down. And so why I care about this is if this continues to go up, which it has all the signs and smellings that it's going to, that means that that's going to line up really well with, the seasonality charts and other short-term bearish outlook views on both equities and crypto. We can get a rough target of this. So this has a consolidation known as a compound fulcrum. And all you need to know about that is it's just like a rough head and shoulders looking type deal. So you get this shoulder, head, shoulder, and a couple weeks ago we were flipping the shoulder as support, and that's of course showing interest in breaking out. So the way we measure this is we just take, if we draw a neckline, we just draw a projection of this and say, okay, 7.3, we'll then project that above the head, 7.3. And that, is roughly a swing at the prior high. So, yeah, so we have a bullish target. We have a bullish breakout on the B bands. When we go and we look at S&P, it's no surprise, looking bearish as shit. If you're looking at the Bollinger Band view of it, if you're looking at it on the weekly, it is hitting its mean reversion target. So maybe we get a little bit of a bounce, but it's a little sketchy, right? So like there's no real support down here. And just because we're hitting the midline, that doesn't always mean that we're just going to like bounce. Like you can see prior examples where it didn't. Sometimes it does, but all that to say is that the market looks like it's interested in lows, maybe a retest of the prior all-time high at 470. If you're looking at it from the SPY ETF. And when we slap the cloud on there, that lines up well with this giant mean reversion setup C-clamp at the prior all-time high. So, yeah, shit could get hairy. And to further support that, when we look at like leading tech stocks that were propelling the market upward, I mean, we have NVIDIA in the cloud. When we look at it from the weekly perspective, another C-clamp. So that was my prior target. So it's still another 15% drop before it even shows signs that like, hey, maybe there's some cushioning below it. Because if this fails, I mean, support's a long way down. So basically you're looking at a mean reversion target. There's no reason to assume it wouldn't just mean revert and continue upward. I mean, it's been turbo bullish. When we slap B bands on here, that's also the midline. So all things are pointing toward, most likely coming down here and ideally bouncing and consolidating something like this, right? Where the B bands just kind of catch up. The market consolidates, probably going into Q4, the sole seasonality view is lining up well here. When we look at things that, where's my Apple? When we look at Apple, for example, Apple is setting up a massive double top. It's just now starting to break out with a big target. So $35 to the downside, another 20% drop. So all these things that are like typically, good pulses on the market, they're not leaning bullish, right? They're just not. The only thing without looking at a chart like Lockheed Martin or Raytheon, I would venture to say they're probably bullish setups. It's LM, right? Oh, LMT. That's right. Yeah. I mean, war is bullish for military stocks. So we're challenging a breakout here. We've been in a multi-year consolidation. I bet if we look at Raytheon, wait, what? Oh, RTX. We look at Raytheon. Wait, what is the stock ticker for Raytheon? Isn't it? Am I spelling Raytheon wrong? Oh,
it should be
Raytheon.
It should be RTX, right?
Yeah, but where's the RTX? Oh, here we go. That was weird. I don't know why that wasn't showing up. Again, no surprise, challenging all-time highs. So, with a really nice reaccumulation, by the way.
Yeah.
Boom.
Multi-year.
Yeah. So if this breaks out, I mean, I know it's a meme right now, but like, depending on how things escalate, like if we're entering into uncharted territories in terms of like our military presence. And if we go into like a World War III type scenario, like these are going to keep breaking out and everything else is probably going to pull back. So when we go to the Bitcoin chart, all of this is supported here. So some interesting stuff has been happening when we look at the CME futures chart. It actually took out this liquidity level, this low, that spot did not, which is, I don't really know what to make of that just yet. But whether you want to paint this as the head and shoulders thing or Adam and Eve double top, the price target's the same. If we do break to the downside of this thing, we have a price target of 14,000 to the downside. Where does that go? Way down here. Okay. And the only thing that has me a little skeptical about this, I don't know if this is cushioning because of people being bullish on the halving going forward or what, but we are slightly deviating from what equities are doing. So like we can see that, if we look at the 4-hour charts, a little bit more obvious. All of these large stabs to the downside have been on the heels of military conflict, but we aren't making new lows. Whereas when we look at S&P, for example, it obviously is. So it's breaking support and trending down. Bitcoin is not, so I don't quite know what to make of that just yet. It is interesting to me that we didn't pop this level, which kind of leads me to believe that maybe over the weekend we see something like that. And if you've been trading this on the weekends, it's like two different worlds. The market behaves in the off hours from the New York trading session. It trades completely differently than it does during the trading session. So a lot of interesting stuff is happening there, and you can kind of see it on the CME futures chart. Like we see these massive gaps that take place. Actually, a little easier to see on the daily. These massive gaps that take place and then fill. We're gapping up, we're gapping down. So there's a lot of volatility that's happening on the weekend, and then come Monday, Tuesday, the market's like, what do we do with this? And so it's injecting volatility all over the place. And if we do get a break to the downside, again, there's no real cushioning down here for traditional structural support. Pretty steep target to the downside. When we look at like mean reversion metrics, that's supported. I mean, Bollinger Bands, counter to what it did before with the squeeze. The squeeze and then the expansion. we're in this land here where we're not trending. We're not, it's like just consolidation land. And so I could easily see us, God damn it, slamming into this midline. And, as we consolidate, this thing's going to creep up. And that would line up really well with our head and shoulders / Adam and Eve lower target, which is the band there. So all that to say, the general way that I view the market is uncertainty is almost never bullish. People buy not because they're like, I don't know what's going on. They buy because they're confident about the upcoming market conditions. And if the dollar is looking bullish and equities are looking bearish, that doesn't bode well. Even if you're just ignoring the halving potential ramifications, like historically, we don't do anything going in out of the halving for many months. And we made a new all-time high pre-halving. I don't see a reason why we can't trend downward and hit some gut-wrenching targets down here in the 44,000s.
Yes.
Like, it doesn't seem unlikely to me,
Mm-hmm.
Do you have a question, Jack?
No, sorry, you heard me like euphoric with the downside target. No, please continue.
Yeah. Just make sure you take a cold shower.
Yes.
So and when we look at things like the Bollinger Bands, again, we're getting expansion to the downside. And every single bounce we've had has been bearishly engulfed. So there's this concept of like inside candles versus outside candles. If we have an inside candle following a break of structure, so here would be an inside candle. This is an inside candle, you get the idea. It's inside the prior candle. Those don't represent strong bottoming conditions. Those represent most likely continuations. Granted, we did get this Chad candle following this strike on Iran last night. It like by a pixel took out this low here. And rallied, but you can see that we're bleeding out. If we look a little lower time frame, like we rallied, it's essentially just a liquidity shell game is what's taking place here. We're seeing levels getting popped bullishly and bearishly. So it's just a chop fest, but it's the common trend here, no pun intended, is it's going down, right? It's making higher or lower lows and lower highs here as we boom, 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 boom. I guess it did break this a little bit, but overall, this is not the condition you want to look for if you're immediately bearish. And what's interesting is when I go on, I think Twitter sentiment is like kind of a meme. Like I don't really care that much about it, but it is interesting that the moment we break a low, there's like this victory march of people buying, quote unquote, buying the dip. And it's interesting that they all tend to buy the very, very bottom, never talking about how their prior dip buy just got completely shat on. But I'd be interested to see what happens when we get down here, because if we hit this new low, what are alts going to look like, right? When we look at alts.
Alts are a disaster dumpster fire right now.
Dude, they objectively look like a pile of shit. They are all showing all the signs of a broken trend.
Yep.
And a subsequent move to the downside continuing. Pick your coin. Ethereum broke its market structure. By the way, pat on the back to myself here. This fucking failed. Unfortunately, didn't even trade it. So, this is in jest, but failed Adam and Eve double bottom. If we fail breakouts, we almost always tag the liquidity zones. And it's exactly what we did. We just gunned straight for the bottom. And when we look at the daily time frame, this looks like a bearish retest. We broke support, came up with another inside candle, by the way. And it looks like it's going to continue. When we go to Doge, the golden pony, looks like shit, right? And at any time I see conditions where it's like you had everything in front of you, all you had to do is just go up. Like it was so easy, just go up, and it can't. Like that to me says, okay, this market condition isn't what you think it is, and at minimum, it's time to just take a step back and reassess. That's why I haven't really been tweeting that much lately, just because I'm just kind of just sitting, fly on the wall, seeing what's going on. But whenever I see things like this, when it's like, yo, world's obvious continuation, and it goes later, nerd, and just dumps, that is not a bullish market condition. Tons of liquidity out down here for the grabbing, right? Down here at 0.11. When we look at the weekly candle, that's like in line with a mean reversion to the midline. Go to, no one cares about Chainlink except for me, but go to Solana, same deal, bro. It looks like ass. I mean, it did get a little bit of a retest here, so like I guess this is cool, but again, this looks like downward continuation land. When we go to the weekly time frame, it did kind of already come within striking distance here, but when we look at structure, it's still plenty of meat on the bone there. And if equities dump and Bitcoin follows, your favorite little meme, dog whistling, whatever is going to break, and it's going to go for the next line of support. And next line of support is like right around 110. So, you know, it doesn't look like number wise that's very far, but percentage wise, it's pretty far. 110 is 25% away. So am I bullish? No, I'm not. Do I care about the global conflict? Not really. I mean, just because it's like all it's doing is just injecting uncertainty, and that alone makes these markets very hostile to trade. If you're day trading this, it's very, very hostile. Like you'll have these perfect setups and then they just get nuked, and then all of a sudden it just runs back to where your setup was going to go in the first place.
Not literally nuked.
Yeah, not literally, not yet. Anyway.
Not yet.
Jesus.
Yeah, there's still time. But all that to say is that at all, you know, the writing is on the wall in terms of what equities want to do. And I think Bitcoin is just, it's up to bat, right? Like if gold starts flexing, which it is, it's recovering very well in these drops. It's running anti-dollar. It has this perfect C-clamp setup and it's just not doing it. So this is the opposite, right? So on Ethereum, we had that Adam and Eve double bottom failure. It broke out and it ran. This is the opposite, okay? It had a mean reversion set up. And I said, no, we want higher highs anyway. That's a very, very bullish market condition. When we look at silver, this thing is doing the catch-up play that I mentioned before. It's, you know, I think the last time we streamed it was like here. It's starting to show signs of life, and it is reflected in the ETF volume, right? We look at that. This is an update to the chart that Josh brought up, but this thing's challenging highs. I personally don't feel comfortable buying here. I'd rather buy here or here. So this is like edging on a buy here, but I just don't want to be buying a macro position into resistance. It's just generally not a good idea. But copper mining ETF looks bullish. Huge volume on the sell side. Zero movement, which means that there's a lot of price absorption going on. So there's a lot of global hedging going on because of the stock market looks like shit, but because of our military, you know, our potential presence in, you know, the global conflicts. We see dollar breaking out. We see Bitcoin just like playing grab ass with its range low. None of this looks like conditions that I would personally be immediately bullish on. Do I think we're going to go into like a macro bear market? No, that's not what I'm saying. Like, to put things, I'll bring it around the other direction. So if we look at, you know, the macro market, like this is still overall bullish. Like if you're one of those people that's like, I'm just taking little nibbles at like DCAing, like this is perfect for you. Like this is your little wet dream where it's like you get weeks and weeks of pullback and you're just lowering your average entry. That's cool. This looks fine from like a macro perspective. I don't, even if this ends up being, you know, I'm sure Jack's going to talk about this, but even if this ends up being a distribution, which it has a lot of the warning signs of it being a distribution, Adam and Eve double tops are just a specific kind of distribution. Like, even if it does run down here, that doesn't mean, oh, bear market a la 2018. That's not what that means. That doesn't mean we're doing this. That means that we're doing something similar to this. And the downside target of this is just somewhere down here. What we do from there is a totally different story. Like, if we come down here and rally, cool. Well, then, you know, bull trend. But in the immediate term, I would really, really caution against being overly optimistic about what the halving is going to mean in the immediate time frame. And there's all of the warning signs that, like, somewhere down here is probably where you want to, you know, have your sights set, because nothing sucks more than buying here, and then you start buying the shit out of these highs, and it just pulls your average entry up, and before you know it, now you got greedy and you're underwater. So
On leverage.
yeah, it's even worse so on leverage. But it's like, just be patient, you know. Even if we do get like a little bit of a bounce here, I think the smarter thing to do would be to either wait for something down here or wait for it to break structure. But insider range is just like, it's chop fest. And we see it on the ETF, the chart that Josh showed, where it was like outflows and inflows are converging. And it's because we're in a range and people are just like, fuck this. Like, I'm just not going to do anything with it. They either sold or they either bought, and they're just like sitting there. Now, when we break the range low or the range high, that's obviously going to change. But until we tackle this on spot, this low, I think it's just chop fest. It's going to be a chop fest, and maybe Israel does something big over the weekend that has us breaking this. But until we pop this low, it's just going to be choppy. Like, we're going to see 5-10% intraday swings, and I would just advise just sitting on your hands and just waiting, to be honest with you. But yeah, that's what I got.
Cool. All right, good stuff, boys.
Do you
Chat.
think the quarter will close higher or lower than April 1st? So April 1st was say 70K. Do you think we'll be higher or lower than 70 at the end of the quarter?
Lower.
At the end of the quarter, so that's what, 2 months away?
Yeah.
I would have to say lower, to be honest with you.
Yeah, I agree. I think we're all
Yeah, I would have to say, I would have to say lower.
In fact, I think wherever that is would probably mark the bottom, whatever our interim bottom is.
For the quarter?
For the year.
Oh, okay.
So I'll let me pull up my chart again real quick. So if I'm crystal balling this,
you got to share it again, but yeah.
I think that most likely what's going to happen is I don't think it does something like this. I think it does something like this. Bam. We get a bounce, and then we bleed out to a low, and then it rallies, something like that. I don't think that if we do break this, I do not foresee a world where it's anything other than anti this, because this was all bought on leverage. And this is going to run through so many stops. It's going to be a massive liquidation cascade. See if I can find an example of something like this. It'll be something like that, right? Where it just nukes 2 days just of gut-wrenching lows. It's gonna break a low. Everyone's gonna be like, "Oh, I bought the dip," and then it goes later, nerd, and it dunks them too. And then everyone's scared shitless down here. We get maybe a little bit of a dead cat bounce, and it forms like some sort of range.
I love how you describe that.
Well, dude, it's just like, it's every cycle. It's like you get these little mouth breathers that are like, "I hope you bought the dip." And it's like, shut up, dude. Like,
it's hour one of like a 60-hour downtrend.
Yeah, like, give me a break. Like, even if you did buy the bottom, I don't care. I it's so annoying. Anyway, but that's what I foresee, is something like that. It's gonna be an aggressive move, even if it does plummet. Like, dude, if things get really hairy, like, it could pop this and keep going. So, like, buying unless you really know what you're doing, this initial break of this range, I would really, really caution against ratcheting up on leverage because there's zero support down here. There's zero support established here. And all of this was bought on leverage. And it's reflected in the chart that Josh showed where it was like open interest was like through the roof, this whole right up.
I'm going to show something too on that.
Okay.
When
All
I
right,
do
well,
my
then
part.
I'll let you go ahead. But yeah, that's, I think this is going to be, when it does break, it's going to be really aggressive. So
one last thing I'll add, the yearly pivot is at 52.5. So
52.5.
Again, with the 20-week, the 54, 52 area, that's definitely the line in the sand.
Yeah, I mean, if it does start closing weeklies down below 50K, that's not good.
I think it's going to come down to
good.
how much do the ETF buyers panic? Do they
yeah,
paper hand everything, you know? Like, because that's how we get to 52 or lower, right? It's going to take like millions of forced outflows to just let it happen.
Schmitty, when you said shout out to me or pat myself on the back, this was the picture I had. Like when the chart played out, he said, "I'm gonna pat myself on the back." They got Obama giving himself.
Yeah, give myself the.
All right. What? Sorry, Josh. I kind of cut you off. What were you saying, man?
Just that the ETF outflows, like to get us to 52, the ETF outflows are probably going to help that.
Oh yeah.
Fortunately, the ETFs aren't leveraged, so.
No, but it is like hundreds of millions of dollars, right? It's 12 billion in at this point. If we get 2 billion out, are we going to be at 52? Probably. Are we going to get 2 billion out? I don't know.
So with the ETFs, if there is a mass exodus, where are those coins sold?
Coinbase for the most part, but it's also OTC.
Is it the same day or is it like delayed?
Yeah. Like what's the timing on that? Is it market close?
It can be throughout the day if there's like a large deviation. So it'll be like midday, end of day, beginning of day type stuff.
Oh, there's like time slots or something?
Yeah.
Could somebody, is that information all real time? Like, could you watch the books and be like, oh, you know, this is abnormal. We had a trend and now it's like the trend is changing because I see a bunch of sells or, you know, so,
I would watch Coinbase volume, spot volume for that.
That's
dude. Okay. If you watch the intraday chart, the market close and the market open are, it looks exactly like equities now. Like the volume spike is fucking massive at the market close and market open. Like orders of magnitude higher than the actual like off session hours.
Well, we were trying to figure out like how did we go from 71 to 60, right? Like who was selling there? It could have been Binance. They swapped their Seifu fund from a mix of stuff to pure USDC.
And BNB, because the BNB Bitcoin chart moonshot.
Okay.
Well, that's like a conspiracy theory. I think anytime they sense bearish environment, they pivot their Bitcoin into BNB to ride out the bear market and then pivot it back. And I've seen that on the chart lately, just as an FYI. I didn't trade it or anything. I just noticed it in hindsight. Anyway, all right. Well, chat, look, usually through Market Power Hour, we usually limit it to an hour, but suck it. We're going to do a little bit longer. So we're going to kind of take our time to this. It's halving. Who cares?
Sorry, we went over an hour once every 4 years.
Somebody in chat said, like, one of you needs to be bullish. It's just, we've said like 10 reasons why there's just 404 bullishness not found, you know? Like, give me one reason to be bullish right now. I can't give you a reason. I don't know. I literally don't know.
I think the strongest bullish argument, I could come up with two, like, and I'm not on this side of the trade, but I could like see this is fair. One is the open interest reset, like Josh was talking about. I think that's a good thing to lean on if you're like a perma bull. I would be pointing to that if that were me. And then the second is like Schmitty was saying, we tried to break down a number of times, you know, at least in the last few days, and we didn't. And that was a really good opportunity to. And yet here we are at 64. So you got to kind of like, okay, you know. But anyway, I'll get into my stuff and we can kind of like convene on the other side of this. If you guys follow me on Twitter, I had a lot of fun engagement baiting these the kind of the permabull groups. Let's start with this. There have been 14 million Twitter posts fed to me, and I know that the algorithm kind of handles everybody differently. So I don't know if this is everybody's experience. So I'm just going to explain my experience. I have seen literally nothing but reaccumulation trade ranges when it comes to Wyckoff stuff for the last month or two. At the end, I have seen zero Wyckoff, with one exception, kind of a bad chart that Capo pulled up. And even if you go and look at Capo's chart, he it's not like this. He says, look, we've kind of done this, and now we're here, and now we need to run the highs, and then we need to run the lows. So this is like Team Capo is something like this. So please don't lump me in with him. Aside from Capo, which makes me vomit a little bit, I have a little vomit in my throat from this. I feel like there have been very, very few distribution. And so one of the first things I always try to say just in general is like, where's the crowded trade? The majority of people I'm running into who bring up the Wyckoff stuff, and I'm not talking about like Josh, but people who are like kind of educated in this and they know what to look for. I'm talking about more like the normie crowd, huge followings, but they don't really use this kind of stuff, and it's more engagement than anything. A lot of those guys are pumping this kind of stuff. So that's interesting. So I made a video, and this is, if you are on my YouTube stuff, I don't make videos very often, but I did make a video on this, and I'm going to give you just the quick cliff notes on why I don't think what we're seeing is reaccumulation, but rather distribution, at least for now, because I'll explain, how ranges can change over time. But here's first things first. Let's look at accumulation and kind of just focus on the structure. So this is reaccumulation on the top. So in a vacuum, whether this is gold or Tesla or NVIDIA or, Raytheon or Bitcoin, here's what you want to see for reaccumulation. First things first, do you have a range? Find where the range low and range highs are, or some kind of area that checks the box for range low, range high, support, resistance. Next, if you had your box, and this is like a really quick 80 IQ way of very quickly seeing, is this a bullish range? Is this a sign of accumulation? Ask yourself, where's the majority of price action taking place? Is the majority of price action taking place on the lower half of the range or the upper half? This is a little trick that I've learned over the years, and it's actually found to be very useful. Is it going to be perfect every single time? No, but we're talking about like what's the general rule, and then there's always going to be exceptions. But when it comes to accumulation, that's one of the things that I ask myself a lot is, if this is the range and we are spending time either on the upper half or the lower half, or which is it? And if the answer to that is, hey, we're actually finding ourselves the majority of time through this range on the upper half, then what that is 9 times out of 10 is distribution. So same thing for distribution. This is a distribution schematic on the bottom side. If I drew a line kind of down the middle, the majority of the price action finds itself in the upper half. What's happening is, and you think of the Wall Street psychology charts and that kind of thing, you have a group of people buying and wanting that breakout so bad they can taste it. They gotta have it. They gotta have it. They're ramping up on leverage. Everybody's going for it. And ultimately, the whole thing gives out. Big picture, what's happening, the composite operator, the strong hands, whatever you want to call them, these are the guys that actually loaded up at some point much lower, and they are selling to retail. So retail is the one being frothy and excited and like calling their buddies and all their normie friends and the people who, they text you about stuff. And they only show up like at the tops, like I think we all have that friend group. Those people show up in here. Okay. I very much, when I go back and I think of how the last month, the 2 months have gone, this is, as far as sentiment goes, this is sort of like where I put things just sentiment wise, because I have had more normie friends reach out to me because of like the ETF than anything else like ever. And I know a lot of people in my friend group are starting to buy up here, not at the 20K when we were breaking out of a falling wedge, not at the 25 to 30K, 6 months of sideways, but literally up here. And so that's very interesting to me. So if I'm building like a checklist on, hey, is this more likely, an accumulation of sorts, a reaccumulation, or is it more likely distribution? I put the normie friends and the sentiment around retail on the distribution checkbox. So that's a big checkbox for me down here. But let's actually look. This is a updated view of the chart that we've looked at literally since this breakdown. And so what's great about Wyckoff and just putting your eyes on this stuff is if you're willing to set ego aside, if you're willing to set aside what you want to happen versus what the charts are telling you are potentially about to happen, you can get some really good entries and exits, or if nothing else, you can be prepared for what could come. So whenever you see a chart like this, you know, it's always very interesting to me to kind of put this out as early as possible, because if things start to break, if this turned out to not be an LPSY, if we suddenly made a new high, if you can start like say, okay, no, that wasn't an up thrust, this is not an LPSY, well, then you can kind of like dismiss this whole thing. But the longer this goes on and the more boxes you can check, along with sentiment, along with open, along with this, along with that, you got to start taking this stuff very seriously. So with this price action that we've seen, this is where I have been and I continue to be. I think this is likely what's happening. One very interesting thing that makes me raise an eyebrow and literally made me close a number of degenerate shorts that I had is this low time frame break. So if we look back on this price action, this is 1 hour Bitcoin, and this is what SCHMITTY was referring to with this this reaction that we saw last night. So we had a low, we had a second low, and then a big impulsive move up and over a creek, or if you're like team diagonal, there's a nice diagonal. If you're team horizontal, there's a nice horizontal. And at the time, you know, this broke up and out, and it was a very strong breakout. Now, in the last few hours, it's kind of been weak sauce. If this is distribution, then this will go on to kind of give it all back and then some, unfortunately. But it was a very interesting move, and it's the strongest move we've seen in a minute. If we throw on like the cloud, you know, on the 1 hour, this is the first time we've been above the 1 hour cloud for, you know, this entire drawdown, you know, putting aside the few hours that occurred there. But this is very interesting to me. So I'm interested to see what happens in the coming hours. And here's why time is the most important thing when it comes to identifying whether something's distribution or accumulation. If we go back earlier in this cycle, in this run up, so let's go back in time to right here, this range. Okay. At the time, you know, again, if we go back and we use our little check, our mental kind of self-check, and we look at just this moment right here. Let's get rid of that and let's just focus right here. You could make an argument that at the time, the majority of attempted breakouts and the time spent by price action was in the upper half. Now, it was very confusing, right? There was run of the lows, run of the highs. But as time went on, you give it enough time, and suddenly it becomes clear. Okay, this was a lot of attempted breakdowns, several creeks, you know, in the Wyckoffian term. This is plenty of time. And it's very interesting to me whenever I see a particular range rotate and pivot from being kind of a scary bearish thing, like, you know, head and shoulder here, a failure to break out here. And then given enough time, this is from March to October. That's the defined points of this range, March to October. Given enough time, suddenly it becomes a ultra bullish thing. And the breakout here was like your big sign, like, hey, yeah, here we go. This is the real deal. So if Bitcoin wants to do something like this up at the current range, I think the missing ingredient here is time. It's not to say that Bitcoin cannot do the same thing it did from 25 to 30, but I think it would be, yeah, like patience would behoove anybody. Like give it a second. Don't be the guy who's saying like I'm all in hero long right here because I know the future and I know exactly what's going to happen in the next 4 hours. You don't. Just like everyone who's thinking this might be distribution, anybody in the distribution camp like me, I think it, but it's not confirmed until we start closing high time frame below range lows. That's how the story works. And like SCHMITTY pointed out, even if this is distribution, I want to go back in time to the 2021. You know, we had a really nice distribution range that we kept an eye on for a long time up here. When we were watching all the whale wallets and stuff back in 2021, I think it was on Glassnode or wherever it was. You know, we were watching in real time the massive wallets changing hands with like the McDonald's retail, that like somewhere in this rising wedge, the number of wallets with 1,000 or to 10,000 Bitcoin holdings were dropping like a stone. They was just in a free fall. At the same time, people with 1 Bitcoin or less was just going parabolic. It was a live view of retail and strong hands making that exchange. But what happened at the end of it, you know, it came down to 30K from its all-time high, and that was enough. That was enough pain before it went on to do more things. And then it did sort of a, you know, same thing, verse 2 version of what happened before, and kind of gave it all back again. But the punchline is, even if this does confirm to be distribution, even if we do teleport down to some very scary level, if we drift sideways with enough accumulation along the way, that could be the bottom. Okay, so a lot of people a lot of the reply guys on Twitter who don't really know me or the content, and they're not here for the streams and all this, they'll like to take things out of context, and they're like, no, he's calling for a 16-year bear market because we broke down from distribution. That the market has proven that is not what has to happen. Distribution, just like any other pattern, has a target, and it could blow through that target. It could be short of that target, but it has a target. And something very similar could happen with today's price action to what happened there. Kind of a napkin mathy way to find distribution. This is not the right way to do it. Okay. This is very like primitive ADIQ. It's just kind of wherever you find your range low to range high, you know, measure that and then project it down. Same thing you would do with like a head and shoulders or whatever, you know, a number of other patterns. And if we just kind of do the same thing here on linear, if we do our, you know, our measurement, let's say from here to here, and we extend that to the downside, that puts us in the 40s. Okay, so if this puts us, and I'm sure that's a little bit subjective, so, you know, give or take a few $1,000s, whatever. But if that puts us in the 40s, then you're talking about a worst case scenario of 72 to 48,000. So a total pullback of like 35%. And this is what's getting people hot and heavy and pissed off and like attacking, you know, me on Twitter and stuff, which has been pretty wild in the last few days, just for even suggesting this idea that a 35% pullback on Bitcoin could happen. Like, it is crazy. The rage that I've seen actually makes me think that something like that is more likely to happen than not, because there is like, it's like people are puking at the idea of, what? Bitcoin can pull back 30%, 35%? That's crazy. Get this guy out of here. That says a lot about how people are positioned. So anyway, but gentlemen, before I move on to like open interest and stuff, any thoughts on any of this so far?
I thought you were going to say 33K by July for a second there.
That's next. Thank you for bringing that up. So
I know you joked about 50%, you know, having the price at halving or whatever.
Yeah.
I've seen a lot of legacy people also make that joke. So
that was a expected joke. Even when we were back in here, I was like, okay, if that's where we're going, then that's going to be the joke. That's just the easy joke to make, that, is this the Bitcoin halving when everyone's portfolios drop 50%? That kind of stuff.
Yeah. I mean, listen, like if equities do pull back more than they already have, and the manner in which they do so is like really aggressive, we could see crazy liquidation spikes that throw the market down 50% and then immediately recover. Like, that wouldn't, not 50% from current price, but from the all-time high. That's not, if you think that's not possible, go back and look at what happened with when 3 Arrows Capital got their assholes ripped apart by that.
Technical term, chat.
Yeah, it's a technical pattern.
You wouldn't get it.
Yeah, don't worry about it. It's technical, but like, those things are possible when people are uber leveraged. So that doesn't seem, you know, Bitcoin responds to equities how alt responds to Bitcoin. Like, that's the correlation. Like, that's the analog there, right? So whenever you see altcoins turbo nuke, whenever Bitcoin moves 10%, Bitcoin does that whenever equities moves 10%. So it's totally possible. That's why I'm really, pushing for don't buy the initial drop, because it's.
Well, you already
it's
said
gonna
it
be
best.
aggressive.
You said when there's uncertainty, which is basically,
Yeah,
we're
that was a
bearish,
good.
but we're also pretty uncertain in the near term.
That's a good
No
way
one
to
wants
put
to
it.
buy this, right? Why would you bother? Just wait, right? Just wait.
I think a lot of people, they miss that Bitcoin has gone from 15K to 70K to a new all-time high for the
100%.
first time ever prior to halving, and they're trying to write that off like that's no big deal. That's a big deal. Like, there's no free lunches in these markets.
400%.
Yeah, there's a give and take it all the time. And I went back through one stream, and I forget what it was. I think it was, yeah, okay. So if you bought at any point on 3x leverage past this diagonal line right here, if you bought at any peak on 3x leverage, or I think a little bit more is like 3.5x leverage, you were not liquidated anywhere along this entire ride. That is crazy to me, that you could have top bought like a 3x long anywhere and been completely fine. I just don't see a world where we make the next leg up to 100K, 150K, whatever's to come, and not just baptize with fire some of these people that have been playing with leverage the whole way up. But so that's part of my like how and why I take a potential distribution top right here serious, because the people that I hear talking like this is very retail minded. They're like, oh, people are going to continue the uptrend because of the ETFs. And I'm thinking like, man, the real work was put in down here and right here and right here. Like, this is not going to get us to 100K. This is the stuff. And if these guys, if everyone who was down in here who put in the real work is taking profit, that's it. That's the end. That's all she wrote. Like, we're done for a minute. Right. And so this kind of goes back to the seasonality that Josh pulled up earlier. It would make a whole lot of sense to me to just kind of bleed down sideways, pick a direction. I don't care, but just not do the bullish thing that the entire world expects for a period of time and then send it. Like, that's fine. That's completely reasonable. And the new all-time highs before the end of the year. But even talking like that will get you a lot of hate these days.
That's just ignorant.
Ignorant. That's ignorant. By the way, the Woody pivot, which this is subjective, this is not like a amazing tool. I'm not telling everyone to run out and use it, but I just think it's
fits his bias, Chad.
But it fits my bias. No, I think it's interesting. So the Woody pivot is a kind of a line in the sand that the market seems to really enjoy, like anywhere within it with a little buffer zone or whatever. But it seems to just like in a very hindsighty way. So this missed the mark. This was very useless, but like even that redistribution top, like that was the Pico top. Just stuff like that is just very interesting to me. It makes me like, oh, okay. Here was, at the last halving, like just right before the last halving, actually. This was actually what was ultimate support. Now I know we nuked straight through it with the COVID dip, but if you want to try to act like that was like, TA worthy, be my guest. In my brain, I just ignore this entirely. So what I think is more interesting is this price action of running from 3K parabolic, consolidating, breaking down, and then the support was actually this Woody pivot. And this was a 50% pullback. This was like 14K to 7. So I think something like this makes a lot of sense to me in the context of today's market. We had this kind of like very bear, tough, rough bear market. We went parabolic. We're starting to break down from the top of this parabolic run, and where could that lead us? So I think it would be interesting for something similar to happen. And if we end up, even if it's like a one of those like wicks that's you touch it once and then that's it, or maybe some sort of accumulation range, and then next thing you know, we go. I think that would be very poetic. I would not be surprised to see it. But at the same time, this is not like I'm setting my bids and walking away and I'm all cocky that we're going to hit this level. I'm not. I'm just saying, if we're talking about downside and potential downside targets, I think we need to have our eye on this. That's all I'm saying.
The other part with the Fed, Powell's going to come out in May 1st, this FOMC. He is very likely not going to be dovish coming out May 1st. He talked in Canada, or I forget where. It was some Canadian thing last week, this week, whatever it was. He was all hawkish, saying like, we don't expect rate cuts anytime soon. We have other Fed governors coming out saying the same thing. The market got increasingly angry on that. That's helping prices fall back, right? Because if you don't like prices here on anything, you're getting paid to wait. So why would you do anything? It's just like, it's going to be easier to go down than up here. And where we're going to be wrong is if we teleport to 74, then we can, I think we can all agree.
Easy line in the sand.
Yes. Right. Like that is the level. So whatever the all-time high, 72, anything up there. And I think we all have to say, all right, we were wrong.
Yeah.
But until then, it's going to be sideways chop / down for sure.
Like this is kind of, I get the question a lot in the streams. It's like, okay, what are the implications of this? And it's like, well, rallies are for selling, that's like a big one. And we're invalidated above 71. Like these are pretty straightforward, you just set it and forget it. So it's that kind of simple for us. So we'll see where it goes,
like
what happens.
This could morph into an inverted head and shoulders over the next like 2 weeks. There's a planet, there's a universe, there's a parallel whatever where this happens. With Legacy as terrible as Legacy looks, I don't think that's gonna hold.
I'll tell you what, I would actually be like the loudest bull in the room if we did something like this. If we continue to kind of like bleed out, giga send it down and reclaim the range, holy, like you couldn't, I'd be like selling furniture around the house and stuff to long this. This would be amazing. This to me, this is a way to turn a really ugly chart into something beautiful. But we're just not there yet. We don't know that we're going to get that recovery. I guarantee you the Twitter reply guys are going to act like they know this is going to happen. But we don't. Just like a lot of the reply guys right now are all about this is reaccumulation. Stop fudding, Jack. You're just fudster, whatever. And I think I'm on the other side of that. I think you're doing more of a disservice to tell people it's up only and like, yes, please, I'm encouraging you to margin long rather than like, hey, maybe slide the margin slider over a little bit instead of 100x, maybe just do 5x, right? If I can't talk you out of the trade. But this is, this just feels to me each time we talk about a Pico top, and we've been around long enough to have several of these now, even on the interim or the high time frame, there's always this group, this like very loud majority group that are like, your words are causing price to go down. How dare you? And they kind of flee to the safe feeling spaces of these other guys that'll be like, oh, it is reaccumulation for sure. You can't know this is reaccumulation for sure. You cannot look at this in good faith and be like, yeah, this is a great chart. This is fantastic. There's no world where that's the case. Could a week or 2 weeks from now it develop into that? Yes, it 100% can. But you can't look at that right now. And I just, man, it makes me really angry when I look at people. And it's almost just like pure engagement bait when they're talking about like, no, this is really what it is. And they're just saying something that they think people want to hear. And that's it. All right, I'm getting off my soapbox. Get that off my chest.
One last thing I'll say, I just looked at the monthly B bands and this will be the second month consecutive that we've opened and closed above the monthly B band. So like we need to just chill out for a second, right? And we're clearly seeing that. We saw that with the on-chain activity. We saw a lot of people selling. I showed that at the very beginning.
Oh
the
my
flows
gosh.
are down. Like the bad news is having an impact greater than it would otherwise, right?
That's
So,
crazy.
It just makes sense to just chill for a second,
Just chill. Just take a breath. Take a breather. Hit the
But
shower.
having.
Hey, for the having. Whatever. I have long ago made my peace with like, and I think you guys are with me on this. We are not here just to be the hype guys. We're here to be the realists when no one else is, and that's our job. And we take that pretty serious. So I think we do a decent job of it. One other thing because I told SCHMITTY I'd go over this earlier, and I'd still want to, but the open interest was something that was of gigantic concern to me. If we look at this chart, so over here is the yellow line is Bitcoin price and the green spikes are the amount of open interest. Open interest, guys, it's like it's like the amount of people gambling on what's going to happen next, right? It's futures and contracts and leverage and like the whole thing. It's all this stuff lumped together. So here's the first all-time high last cycle. This is when Bitcoin hit like 63K. Okay, and you can see there's like a big swell in open interest over here. Then we go on and we hit 68,000, 69, whatever the Pico price thing was, or whatever it wicked to. And you can see that up here, the green line, once again, it was, let's like kind of focus on this. Once again, it was very high. And it spiked to a particular level. It died out in between. So the dying out is a lot of the leverage positions leaving the system, a lot of the gamblers leaving, everyone who maxed out their mom's credit card to, you know, to go long on their altcoins, they're all wiped out. Typically, that is a good start for another run. That's like kind of what we like to see, even if it's like an interim kind of bearish moment. So let's fast forward to today and let's look at this. So price hits an all-time high, and I'm going to turn this off. I'm going to turn price itself off so you can focus on the green. This is crazy. The amount of open interest was almost twice what it was last all-time high, last Bitcoin's all-time high.
Is it crazy though? Is it?
I mean, I know it's going to be different cycle to cycle
It's
to
ETFs,
cycle.
man. Like,
okay.
We talked about this before. I'm not going to disagree that it's high, but like, how do you know where the ceiling is?
Well, okay, that's fair. Like it's
like when we get options, do you know how high OI is going to go? OI is going to go to infinity when we get options. Like,
well, so you're right. You're right.
Now, if you isolated Binance or something, I would be more on board with that analysis. But
they're actually
this time.
There is a way. So Binance back at this.
Just scroll down.
Oh, okay. What is this? Binance independent here? Okay.
Yeah.
Okay, so this is like the last two all-time highs, right? Yeah, April and then November. Yeah, okay, so here's the last all-time high. Binance was, 6 billion and change, and then they hit over 8. So like a 50% increase. Is that a crazy amount between two cycles? I don't know. Between cycle 1 and cycle 2. I don't know. I like Josh said. But all I'm trying to point out is when I think of like the big question, right? Of like, is this more likely a top or reaccumulation or what? One of the things I'm going to look at is open interest. And if I can make a case that the open interest is exceedingly high, at least in comparison to what I've seen before, then I have to put that in the checkbox for like, okay, yeah, this is probably more likely a top. One thing that I think is interesting, if we kind of hone in on this and we look at where it really popped off. So we have, this is like March 14th, March 28th. Let's go back and look at like those specific days, like right around March 14th. Where's that? Right here, the Pico top. And then March 28th. So right in here. So these two levels. So literally this, what would be in the Wyckoff world deemed like a bearish upthrust, and then a failure to break out or LPSY, whatever you want to call it. Even if you want to like kind of lump it into one large rising wedge, there's lots of ways to view it. But you have a bearish chart thing occurring like simultaneous to, something very not great over on the charts. And then you have one last little upthrust on April 8th, which was right here. So you can identify on the chart where people are offsides. This is what I'm getting at. And either they've already been, all these people who are on the wrong side of the trade, either they're already been fleshed out or they haven't yet. And I think there's a pretty strong argument to be made that they're probably not out yet. And this is probably why there's lots of bottom callers and lots of we have to go up and there's no way this goes down, because this chart tells me a lot of people got offsides right at these failed breakouts, right at literally the worst times possible. Very interesting.
Isn't open interest just general interest? Like it doesn't lean bullishly, so that could just be people hedging too.
That's true. It is. But I just historically, I usually correlate a spike with a top. Like that just seems to be kind of the case. And I don't think it's where, this is where my speculation comes in. I don't think it's people speculating that it is a top. I think it's that they're speculating it's going to go higher, because I think that's like the retail mindset and euphoria, and we're going to go up, and I have this reason to be bullish, and we're going to double from here, and blah blah blah. But even like each of
Here's
these
my
little
question
tops.
for you. Here's my question for you.
I got
Rubbing
it,
the
okay.
crystal ball.
Okay.
Let's say we go to wherever we're going, 50, 40, whatever. I don't think we're going to 40, but let's say we go wherever. In 3 months from now, 6 months from now, do you think OI is going to double, triple, be the same?
Oh,
Like,
from now, I think
yeah,
I think
I'm
it's
trying to put you in a spot.
put me on the spot. I
Yeah.
think it washes out just like what happened back here. So remember the last time we saw a distribution that wasn't a multi-year bear market, it was just like a pullback, like a cool off. OI dropped, overall in the system, it was like 23 billion, and then it fell down to 10. It cut in half. I bet something very similar happens here. I bet open interest drops from whatever it topped out at, 35 billion or something. I bet it falls as low as 20. What is that? I'm trying to see like where on the chart that would be. Okay, so it's about this level. Stupid little slider thing. It's about where my crosshair is. So the turn price off, like right there ish. So maybe right in line with the the last cycle highs, where these little spikes were. So I think all these people, everybody above the midpoint of my little dotted line on the right side there.
So it's basically
I bet they get washed out
after the GBTC recovery, right?
That's my crystal ball speculation. That please NFA don't ever even try to trade this. Based off of that, it's just what I'm guessing will happen. It's interesting stuff, man. I love these markets because it's never the same. It's always something new. As soon as the world thinks they get their arms around what's going to happen, I remember just being dumbfounded at even the concept of a trade range. I was like, Bitcoin can't be in a trade range. It only does like parabolic stuff. This is crazy. Like a macro trade range. And now here we are, potentially talking about a big pullback on the heels of distribution and, resetting OI. I don't know. It's not where I thought we would be. We go back 4 years from now, gun to my head, I wouldn't be like, oh yeah, Bitcoin tops literally at the halving. And after it's made a new all-time high. No shot. But here we are. Here we are.
I'll say, like, I'll echo what SCHMITTY said, that it's encouraging that legacy is melting down and Bitcoin is not.
That's fair.
Yeah, that's an interesting data point there.
It's definitely not a promise that we won't melt down later, but it's a good sign. It's a good sign.
Yeah,
it could also be that it's like, dude, with weekends, it could also be that it's just like, just waiting for. It seems that weekends, obviously there are lower liquidity environments.
No, bro, it's because the halving's coming up. Everyone's buying. Come on.
Oh yeah, it could be.
Anyway, that's all I got.
Interesting. I do think, volume is consolidating yet again. It was consolidated, big swells and sells, lower time frame. Obviously there's more consolidation. I think if this is to be a very like a real recovery, if this really is going to do something like that, you need the bulls to step in at some point. The bulls have got, or option B, we actually do make some kind of new low, like puke a low, and it's super low volume.
Well, we need a narrative. We need Powell to come out and say, okay, I'm definitely cutting this date. We need Israel and Palestine and Iran and whatever to come together and say, okay, we're making a peace deal, something, right? There needs to be some certainty somewhere. The rates don't go to infinity. Like, we don't have any of that right now.
The odds of there being a peace deal anytime soon is like 0%.
I agree. So yeah. Just all no reason to just kind of do nothing.
I had a lot of people on Twitter talk about like just spot buying and chilling. And, I don't think that's like a bad move at all either.
No, because I think even shorting this is tough. I mean, look at the response we had last night. Like,
anybody who's short just got blown out. Yeah. Who
and when
shorted down
the
in
last
here.
3 days.
Yeah. Anyone in there is like gone. Maybe in here you're still safe. If you had like a spot here. Yeah.
So you should, I've been playing around with a new indicator you should take a look at. They're basically just deviations of, do you ever use the volume weighted moving average?
Yeah.
So you type in Bybit liquidations for your indicators.
You know what? Let me
Yeah,
put
that
on
one.
this chart. Yeah, okay. By bit.
And what it is, it takes a volume weighted moving average, VWMA, and it does percentage moves. So go ahead and double click on that and I'll clean it up for you real quick. So put it on the
Okay.
daily chart and then make your so go back to inputs.
Okay. So hold on, it's a little delay on your side.
Yeah.
Inputs.
So
Got it.
go to inputs and
Okay.
make your input the one capital D. It's like kind of finicky. So
1D. Okay.
yep. And then clear everything off of there that isn't 10x leverage. Show the baseline because that's like the moving average, but it has been very, very good. Yeah, and I guess change the color. I don't know if you can see that, but it has been very, very good at showing relative tops and relative bottoms historically. And you know, it basically what it's doing is it's taking a volume weighted moving average, which is like if you're looking at like if you're rating quickness and responsiveness of moving averages, it's like SMA is the slowest, EMA is faster, and VWMA is even faster than an EMA. Because what it does is it weights, it throws volume into the equation. So it's like if it's a high volume move, it makes it move faster. And so when you have these deviations, what it's doing is it's approximating. It's like, okay, if you were 10x leverage and this tags this band,
you blown out.
Yeah. And of course, everything greater than 10x is obviously blown out. But look at it historically; it's been very, very good at calling trends and being good mean reversion targets.
Oh wow.
Yeah, it's been really, really good. Like even go back many years back, like to the prior bear market and the bull market. It shows really good overbought conditions, oversold conditions. And it looks very similar to the top where you have your rising wedge there.
Okay.
See how it's like breaking down and it's like hugging the lower 10x band.
Yeah.
That looks exactly like what we're doing right now. And it's basically just the same concept as like a Bollinger Band where it says, okay, we've glued to this band and now we're going to ride it. If it glues to a 10x band, it's basically saying we're perpetuating liquidations over and over and over again. It's a visualization of a liquidation cascade.
Huh.
And so it looks like the beginnings of that to me, where it's grinding out liquidations over and over and over again. And everyone who buys the dip, you know, gets blown out, gets their backs blown out. And yeah, so it's just, it's all that to say it's also supporting this, you know, this idea of lower lows. And by the way, if you're a day trader, I've been using this on the 5-minute time frame and it's amazing. Like if you're looking for just like really cute little charts, throw the change your time frame. Yeah, change it to 5-minute and throw the 100x liquidations on there. It just ping pongs back and forth between all these liquidation bands. It's so interesting to watch. I've been trying to develop a strategy where I can just automate this as like a liquidation bot.
That's a cool idea.
Yeah, because I mean that's like this chop, dude. Because it's been driving me crazy. All this chop has been driving me crazy, and I'm like, someone is profiting on this, and I want to know how how are they exploiting retail? And this is how they're doing it. They're just liquidating them over and over and over again. High, low, high, low. And as you throw on like the 50 and 25x, it's just little layers on the onion. It's the same thing. So you can see these really extremes on these swings where it's just grabbing these liquidations and then it just reverses.
Look at that move. So this is the 50x short line. What is this? The orange line got like smacked. Yeah. Same to the downside. Anybody who was 50x long got just
wait. Hold on. Are you telling me I shouldn't use 100x leverage?
I'm saying if you are, you're getting your butt
you're
to shreds.
You're gone. Yeah,
you're gone on a routine basis.
Speaking of, BitMEX just added 250x leverage.
I saw that.
For the two people that still trade there.
Dude, what would that even be? That'd be like a 0.1% move,
a tenth of a percent move.
I don't know, just stupid.
What? That's so stupid, dude.
But yeah,
Oh,
anyway,
well,
I just I thought you'd find that interesting.
that is interesting. So having. That's cool.
That's it.
That's
Good
it, guys.
talk.
We figured out the having. Congratulations, everybody. We did it. Interesting stuff.
What time is the actual having? It's like 6, right? Or
Well, it's
6 Eastern.
now it's saying 7 hours. It was like 9 hours earlier. It went to 6, then up to 7. So 7 hours from now, your time is like, yeah, whoever the viewer is, probably 7 hours from now. 1 UTC. 420.
Blaze it.
Blaze it. So anyway, chat, in summary, we don't have a clue. This is very, very tricky market. We have a hint of where things may go.
I think near term we're all on the same page that we're pretty bearish. We'd have to see a lot. We'd have to see a lot of information flip to be bullish in the near term, I think.
Yeah.
Medium term, I also think we're kind of like probably more likely bearish than bullish. And the longer term, I think we're all in agreement. Q4 is our best chance, like realistically, post halving.
Yeah, for sure.
Like the other thing
Also
about
for
seasonality,
equities too.
yeah. The other thing about seasonality, like because of the ETFs, I think we have shifted the stuff a little bit. So if Q2 is bearish, in like, does that mean September's not a terrible month? Maybe something to think
Right?
about.
I was wondering that too. Like, I mean, we made a new all-time high before halving, right? So it's like a lot of things I feel like are out the window. But does that change the seasonality going forward? You know, what are we doing?
Yeah, I don't know.
Well, chat,
But
we will be here. We will continue to keep our eye on the charts, and we will do our best to share whatever we see, good, bad, or ugly. And if we make you uncomfortable at talking about tops, then just wait. We're going to make you real uncomfortable talking about bottoms when the time comes. When you're shorting on
my bottom
50x
like that.
leverage. We're going to talk about SCHMITTY's bottom 100%. All right, guys, anything you want to shill before we wrap it up?
just give us a follow on Twitter, Carpernoctum, Twitter, YouTube, 4 videos a week, live stream, all the good stuff.
Don't follow me on Twitter. I posted something on
Damn.
Twitter, and I got a whole new flood of people that I don't like commenting on my stuff. If you don't follow me now, don't do it.
Bro said,
You're
don't
annoying.
follow me.
You guys are annoying. Go away.
You heard it here first.
Get off my lawn, says SCHMITTY.
Yeah, old
All
man yells at cloud.
All right, boys and girls. Thank y'all for hanging out. Enjoy the rest of your day. You're T-minus 7 hours to having. Yeah, we'll wrap it up there. Big unfollowed, says Vinny. Good. Okay. More of that, guys. More of that. All right. Thank you, guys. And Josh, SCHMITTY, thanks for your time, guys. Y'all have a good one.
Yep. See ya.
See ya. Good talk.
Later.